ExamPrep.School. Wisconsin State-Specific Life Insurance Exam, Exam Code 22-2. There are 6 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Federal regulation, licensing, state regulation, UI statutes, GSR rules pertinent to life insurance and annuities. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. Which of the following is a requirement for an individual seeking an initial Wisconsin insurance producer license? A. Possession of a bachelor's degree in insurance or related field. B. Submission of a surety bond equal to 10% of anticipated premiums. C. Completion of at least 20 hours of state-approved pre-licensing education. D. At least 5 years of prior experience working for a licensed insurer. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like, longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is C. This option is correct because Wisconsin statutes require completion of at least 20 hours of approved pre-licensing education before the initial insurance producer license can be issued. Reason A is not correct. No academic degree is required. Only pre-licensing education is mandated. Reason B is not correct. A surety bond is not required for individual producer licensing in Wisconsin. Reason D is not correct. Prior industry experience is not a statutory prerequisite for initial licensure. Question 2. Which statement accurately describes a non-resident insurance producer who relocates to Wisconsin intending to maintain licensure? A. The producer may continue operating under the non-resident license indefinitely without notifying the commissioner. B. The producer must retake the Wisconsin insurance producer examination before transacting any business. C. The producer must request a conversion to a Wisconsin resident license and submit a certification of the original license within 30 days. D. The producer must complete an additional 24 hours of state-approved continuing education prior to license conversion. The correct answer is C. This option is correct because Wisconsin law requires non-residents who change their legal residence to Wisconsin to request license conversion and provide certification of the original license within 30 days. Reason A is not correct. Notification and conversion are mandatory. Indefinite non-resident operation without notice is prohibited. Reason B is not correct. No exam retake is required due to reciprocity agreements under Wisconsin law. Reason D is not correct. There is no extra continuing education requirement for conversion beyond the regular CE schedule. Question 3. A new candidate for a Wisconsin producer license has completed her online application and uploaded all required educational transcripts through the CIRCON portal. To finalize the submission and route the application to the Office of the Commissioner of Insurance for review, which step must she complete next? A. Pay the required licensing and application fee electronically. B. Schedule a fingerprinting appointment with an approved vendor. C. Mail a printed copy of the application to the Department of Insurance. D. Upload proof of completed background check. The correct answer is A. The licensing fee must be paid electronically at the time of online submission to complete the application packet and trigger department review. Fingerprinting and other post-submission steps follow only after fee payment. Reason B is not correct. Scheduling fingerprinting occurs after the application is fully submitted and the fee has been paid. Reason C is not correct. Online submission replaces the need to mail a printed copy of the application. Reason D is not correct. All required documents, including background check proof, should be uploaded prior to fee payment, and no additional upload is needed at that stage. Question 4. Under Wisconsin administrative rules, an insurance producer must retain all transaction and client suitability records for a specified minimum period measured from the date of the transaction or termination of representation, whichever is later. What is the minimum retention period? A. 6 years. B. 5 years. C. 3 years. D. 10 years. The correct answer is A. The correct answer is 6 years because Wisconsin code requires producers to keep transaction and suitability records for at least 6 years from the transaction date or termination of representation, whichever is later. Reason B is not correct. A 5-year period does not meet the 6-year requirement set by Wisconsin code. Reason C is not correct. A 3-year period is shorter than the 6 years mandated by the applicable Wisconsin administrative rule. Reason D is not correct. A 10-year retention exceeds the minimum period and is not required by Wisconsin rules. Question 5. According to Wisconsin statutes, which of the following correctly describes the requirements for an insurance producer's place of business? A. A producer may use a P.O. box as the official address on file if a physical office is maintained elsewhere. B. A producer must maintain a physical street address in Wisconsin and report any change to the commissioner within 30 days. C. A continuously staffed office is required and any address change must be reported within 60 days. D. A principal business address is optional if the producer operates under an insurer's office designation. The correct answer is B. The correct answer describes the Wisconsin requirement that a producer's primary address must be a physical location in Wisconsin, and that the commissioner must be notified of any change within 30 days. Reason A is not correct. A P.O. box alone is not sufficient as the official address must be a physical street location. Reason C is not correct. The required notification period is 30 days, not 60 days under Wisconsin law. Reason D is not correct. Maintaining a principal business address is mandatory regardless of insurer office designations. Question 6. Within how many days after completing a continuing education course must a provider transmit course completions to the Wisconsin Office of the Commissioner of Insurance for credit to apply toward a producer's biennial requirement? A. 15 days. B. 30 days. C. 60 days. D. 90 days. The correct answer is B. This option is correct because Wisconsin law requires continuing education providers to transmit course completions to the Office of the Commissioner of Insurance within 30 days of course completion for credit to apply to a producer's biennial requirement. Reason A is not correct. This is too short. The statutory reporting window is longer than 15 days. Reason C is not correct. 60 days exceeds the maximum reporting period mandated for course completions. Reason D is not correct. 90 days is beyond the legislative deadline for transmitting CE completions. Question 7. Laura's Wisconsin life producer license expired on June 15, 2023, and she did not renew by that date. On August 15, 2024, she seeks to reinstate her license. Under Wisconsin renewal cycle concepts, what must she do to regain licensure? A. Rely on a 30-day automatic grace period, and submit proof of completed continuing education by September 15, 2024. B. Retake the licensing exam and complete 60 hours of continuing education before applying for reinstatement. C. Submit renewal within 30 days of expiration by paying 120% of the renewal fee without additional continuing education. D. Submit a renewal application, pay both the standard renewal fee and the delinquency fee, and complete the required continuing education within 5 years of expiration. The correct answer is D. Under Wisconsin law, a lapsed producer license may be reinstated within 5 years by submitting the renewal application, paying both the standard renewal fee and the delinquency fee, and completing the required continuing education. After 5 years, a new exam must be passed. Reason A is not correct. There is no automatic 30-day grace period. The license lapses immediately at expiration and must be reinstated through the formal process. Reason B is not correct. Requires retaking the exam and excessive continuing education hours, but exam retake is only required after 5 years and CE remains at the standard amount. Reason C is not correct. Wisconsin does not use a fee multiplier within 30 days. It imposes a delinquency fee in addition to the regular renewal fee and still requires CE. Retroactively cancel the policy as of inception and return any excess premium. A. Issue cease and desist orders to entities operating without a license. B. Set maximum policyholder dividend rates for mutual insurers. C. Promulgate administrative rules to implement and enforce the insurance code. D. Prescribe federal income tax treatment for insurer reserves. The correct answer is C. The Commissioner's general powers include rulemaking under Chapter 601. Issuing cease and desist orders is an enforcement function, not rulemaking. Dividend rates and federal tax treatment fall outside the statutory scope. Reason A is not correct. Issuing cease and desist orders is an enforcement power, not a general rulemaking power. Reason B is not correct. Determining dividend rates is a board or corporate function, not a commissioner power. Reason D is not correct. Federal tax treatment is governed by federal law, not state insurance statutes. Question 9. Which duty is explicitly imposed on the Wisconsin Insurance Commissioner by state law? A. Conduct financial examinations of insurers to verify financial condition and solvency. B. Approve all reinsurance treaties and their rates before they take effect. C. Set premiums for individual life insurance policies statewide. D. Oversee corporate mergers and acquisitions unrelated to insurance activities. The correct answer is A. State law requires the commissioner to examine insurer financial condition to ensure solvency. Reinsurance treaties may be filed but not require prior approval. Premiums are filed by insurers, and non-insurance corporate mergers fall outside jurisdiction. Reason B is not correct. Reinsurance treaties are subject to filing requirements but not prior approval in all cases. Reason C is not correct. Insurers propose premiums. The commissioner reviews filings but does not unilaterally set rates. Reason D is not correct. Jurisdiction is limited to insurance-related corporate transactions. Question 10. Under Wisconsin insurance law, the primary purpose of a contested case hearing conducted by the commissioner is to A. Provide a public relations venue for the commissioner's office. B. Establish federal guidelines for state-level insurance regulation. C. Allow insurers to negotiate premium adjustments directly with the commissioner. D. Adjudicate regulatory disputes and ensure due process for affected parties. The correct answer is D. Contested case hearings are formal administrative proceedings to resolve disputes, determine facts, and protect due process rights. They are not for public relations, premium negotiations, or federal guideline setting. Reason A is not correct. Hearings serve adjudication, not public relations. Reason B is not correct. State hearings do not set federal regulatory guidelines. Reason C is not correct. Premium adjustments are reviewed via rate filings, not contested case hearings. Question 11. Linda receives a notice from the Wisconsin Commissioner of Insurance, scheduling an administrative hearing on alleged licensing violations. The notice was mailed on June 2nd for a hearing on June 15th. Linda believes she did not receive adequate notice and seeks to postpone. According to Wisconsin administrative procedure, what is the minimum number of days' notice the commissioner must provide before an administrative hearing? A. 7 days. B. 10 days. C. 20 days. D. 30 days. The correct answer is B. This option is correct because Wisconsin Statute Section 227.42 requires the commissioner to issue notice at least 10 days prior to an administrative hearing, ensuring adequate time for preparation or requests for continuances. Reason A is not correct. A 7-day notice period is shorter than the statutory minimum and does not comply with Section 227.42. Reason C is not correct. A 20-day period exceeds the minimum requirement, but is not the mandated standard for notice. Reason D is not correct. A 30-day notice is longer than the required minimum and is not the statutory standard. Question 12. An insurance producer in Wisconsin is found after a hearing to have rebated premiums in violation of state law. Which administrative penalty may the Commissioner of Insurance impose for each violation under Wisconsin statutes? A. A fine up to $500. B. A fine up to $1,000. C. A fine up to $5,000. D. License revocation only with no monetary fine. The correct answer is B. This option is correct because Wisconsin statutes grant the commissioner authority to impose an administrative fine not exceeding $1,000 for each violation of insurance laws, including unlawful rebating. Reason A is not correct. The statutory maximum penalty exceeds $500, so a $500 fine understates the commissioner's authority. Reason C is not correct. A $5,000 fine surpasses the statutory limit and is not authorized for each violation. Reason D is not correct. Although revocation is possible, the commissioner is also permitted to impose a fine up to the statutory maximum. Question 13. Under Wisconsin insurance regulations, what is the principal objective of periodic financial examinations and solvency monitoring conducted by the Office of the Commissioner of Insurance? A. Verify maintenance of required statutory surplus and reserves to safeguard policyholder benefits. B. Evaluate the cost-effectiveness of underwriting guidelines implemented by the insurer. C. Confirm competitive equity among insurers by standardizing underwriting practices. D. Ensure compliance with federal capital adequacy standards exclusively. The correct answer is A. The correct answer is that the primary objective of solvency monitoring is to verify that insurers maintain required surplus and reserves to protect policyholder benefits. Reason B is not correct. The focus is on statutorily required reserves, not evaluating underwriting guidelines. Reason C is not correct. Standardizing practices is not part of solvency monitoring's objectives. Reason D is not correct. Federal capital standards are separate from state solvency oversight. Question 14. Under Wisconsin state regulation, insurers must submit proposed rate schedule and policy form changes to the Office of the Commissioner of Insurance at least how many days before their effective date? A. 0 days. B. 30 days. C. 10 days. D. 45 days. The correct answer is B. Wisconsin law mandates that insurers submit proposed rate schedules and policy form changes at least 30 days before their effective date to allow for regulatory review. Reason A is not correct. Use is not immediate. Prior submission is required. Reason C is not correct. A 10-day period is too short under state law. Reason D is not correct. 45 days exceeds the statutory filing timeframe. Question 15. Greenfield Life Insurance Company has developed a new term life insurance policy form with unique benefit options. Before marketing this form in Wisconsin, what must the insurer do under state policy form approval requirements? A. Use the form immediately and file within 30 days after first issuance. B. File the form and, if the commissioner takes no action within 30 days, consider it approved. C. Submit the new form to the Wisconsin Office of the Commissioner of Insurance and obtain explicit approval prior to use. D. Submit the form and implement a 15-day waiting period after filing before use. The correct answer is C. The correct answer is that explicit approval is required prior to use because Wisconsin operates under a prior approval system. Under prior approval, policy forms cannot be used until formally approved by the Commissioner of Insurance. Reason A is not correct. Wisconsin does not allow a use and file approach. Policy forms require approval before being issued. Reason B is not correct. Under Wisconsin law, policy forms are not automatically approved by default after 30 days. Explicit approval is necessary. Reason D is not correct. There is no 15-day waiting period provision. Forms require formal approval regardless of time elapsed. Question 16. Sunrise Mutual intends to introduce an annuity contract form in Wisconsin that was previously approved by the Illinois Commissioner without modifications. According to Wisconsin filing expectations for policy forms, what must Sunrise Mutual do before using this form? A. Use the form immediately as it is already approved by another state regulator. B. Log the form with the Wisconsin office and deem approval granted if no response in 60 days. C. Submit the Illinois-approved form to the Wisconsin Commissioner and secure prior approval before use. D. Provide a certification of filing and a summary of modifications within 45 days after first use. The correct answer is C. The correct answer is that any form, even if approved elsewhere, must be filed with and explicitly approved by the Wisconsin Commissioner before it can be used in Wisconsin. Reason A is not correct. There is no reciprocal acceptance of out-of-state approvals. Wisconsin requires its own prior approval. Reason B is not correct. Wisconsin does not employ automatic approval after a set period. Explicit approval is required. Reason D is not correct. Wisconsin rules do not allow use first and file later. Approval must be obtained before any use. Question 17. Under Wisconsin administrative rules, which of the following is not one of the fiduciary duties owed by an insurance producer to a client? A. Duty of loyalty. B. Duty of care. C. Duty of confidentiality. D. Duty of advocacy. The correct answer is D. The correct answer is the duty of advocacy. Wisconsin administrative rules recognize duties of loyalty, care, confidentiality, and disclosure, but not a duty of advocacy. Reason A is not correct. This is a recognized fiduciary duty requiring the producer to act in the client's best interests. Reason B is not correct. This is a recognized fiduciary duty requiring the producer to use skill and prudence in client dealings. Reason C is not correct. This is a recognized fiduciary duty requiring the producer to protect sensitive client information. Question 18. According to Wisconsin insurance regulations, an insurance producer who collects premiums on behalf of an insurer must remit those funds by which deadline? A. On the same business day. B. Within 5 business days. C. By the end of the next banking day. D. Within 30 calendar days. The correct answer is C. The correct answer is by the end of the next banking day. Wisconsin rules require prompt remittance of premium funds to protect client interests and ensure trust accounts. Reason A is not correct. Remitting on the same day is stricter than required. The rule specifies next banking day. Reason B is not correct. 5 business days exceeds the allowable time frame and is not compliant with Wisconsin regulations. Reason D is not correct. 30 calendar days is overly lenient and not permitted under Wisconsin rules. Question 19. Which of the following actions would most likely constitute prohibited commingling under Wisconsin fiduciary standards? A. Depositing collected client premiums into the producer's personal checking account. B. Placing unearned premium refunds in a trust account separate from personal funds. C. Depositing earned commissions directly into a commission liability account. D. Using a designated escrow account to hold premiums for multiple insurers separately. The correct answer is A. The correct answer is depositing client premiums into a personal checking account, which mixes client funds with personal assets and violates fiduciary obligations under Wisconsin standards. Reason B is not correct. Refunds held in a separate trust account comply with fiduciary requirements by keeping client funds segregated. Reason C is not correct. Commissions placed in a commission liability account do not mix client premium funds with personal assets. Reason D is not correct. Using separate escrow accounts for each insurer keeps funds properly segregated and meets fiduciary standards. Question 20. A Wisconsin licensed life insurance producer ceased writing new policies in June 2018. In April 2024, the Office of the Commissioner of Insurance requests all premium trust account ledgers and related documents for policies last transacted in 2014. The producer has already destroyed records older than 5 years. Under Wisconsin regulations governing producer fiduciary accountability, what minimum period after the final entry date must the producer have retained these records? A. 3 years after the final entry date. B. 7 years after policy termination. C. 10 years from the original policy issue date. D. 5 years after the final entry date. The correct answer is D. The correct answer is 5 years after the final entry date because Wisconsin Administrative Code INS 6.07 requires producers to retain premium trust account records for a minimum of 5 years following the last transaction. Periods shorter than 5 years fail to meet the statutory requirement, while periods longer than 5 years exceed the minimum standard but are not mandated. Reason A is not correct. A 3-year retention period is too short and does not comply with Wisconsin's 5-year requirement. Reason B is not correct. 7 years is longer than required. Wisconsin's regulation sets a 5-year minimum, not 7. Reason C is not correct. 10 years counts from issue date rather than the last transaction and exceeds the mandated retention period. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below, we read them all. Find full practice exam books in the description or at ExamPrep.School.